look at the cut report. The cut report is released every Saturday by ProFX. You can see it at the ProFX Investing handle, which is shown here. So the first thing we'll be looking at is, as we mentioned, gold. And as you can see, there were over 326,000 long positions put with over 60,000 short positions, which takes the net positions put to 286,410. This basically indicates that there were way more long positions placed by the large financial institutions, which can be deduced to expecting a bullish outcome from the market, because they are the market movers. So let's go to our charts and see what we can find on gold. So looking at the gold chart, we would first want to mark our range, and the first thing that comes to your mind when you think about marking your range is your extreme range orders, which are what we call our EROs in the ProFX Investing. So to mark out your EROs, you need two things basically. The first was you must spot out a sweep of liquidity followed by a break of structure. Then let me draw it out for our gold there. As you can see, there was a sweep of liquidity which occurred at this position, followed by a corresponding break of structure which happened here. So with that, we can mark the low position as a protected low. Then similarly, we'll look for a similar situation at the high position. First check for our sweep of liquidity, which occurs from this position to this. Then a corresponding break of structure, which occurred here. So as we've marked it, we can now say we have both protected highs and lows. This gives us an edge in the market. And from the earlier narrative given to us by our cut report, we know that we're expecting a bullish movement from the gold pair. So we'll first start by looking for the transfer of money from the market. So first we'll check for where money has been transferred, and to do that, we saw a demand zone located here, and it has been swept. So that means money has moved out from this region over to here, and a similar situation happened here. So we can now deduce that there is no money in this region and it has been moved over to a higher region located here. Moving over here, we can see a similar situation. There is an imbalance located at this region, and we can now see our demand zone, which is in this area. You should also realize that in an uptrend you're looking for your demand zones, while in a downtrend you'll be expecting a supply zone. But we can see this huge candle, and it produces a vector level which we expect the market to react off from. So with this, we expect a movement where the market pushes up, then comes down to our demand zone before continuing its original intended bullish run. But for this demand zone to be validated, we first have to notice an inducement. And going to the 30 minutes time frame, we can see that there was an inducement pullback which was located in this area. So to level that. So now we've marked out as well. We now have to use further confirmations like advanced tools to further back our narrative that the market is going to play out how we've analyzed on the normal candle chart. And for that, I'll be using the TPO chart. So on our TPO chart, we can see this is what the market created. As you can see, the market was in a kind of downtrend. Then the current market price, the Friday market profile, printed a close which occurred above the value area. And as you can see, the close created a poor high, which is shown by these two blocks printed at the top. So with this poor high, we expect the market to break the current high and create a new acceptance above this region. So that will be all for gold.